Let's get to Rick Santelli now for the details out of the Fed's Beige Book, which was just released moments ago. Rick.
Yes, on one hand, Fed says activity increased in almost all districts. But on the other hand, it increased but still well below pre-COVID levels. So there's your tug of war with regard to headlines. The Fed, of course, is implementing lots of programs. I believe there's 9 of them. About half of them are functioning, and things have worked out pretty well. And if you look at how the markets reacted to some of these early headlines on the Beige Book, 2 years haven't moved much. They're a little down on the session. If you look at 10 years, they're virtually unchanged at 62. But as you go down the curve, 30-year bonds are getting a little bit frisky. And we see, of course, that the equity markets have popped a little bit here. The dollar index, it's like 1/3 of a cent off its lows today. It was well below 96. It's firmed up. But none of that is Beige Book responsible. In the end, if you're going to walk away with a notion on the Beige Book regarding the Fed in its next meeting, it's going to be, we want to do as much as we can. Things are looking pretty good now, and they may look better, but they're not going to look nearly as good as they did in February. Melissa Lee, back to you.
Rick Santelli, thank you. And for more analysis, let's bring in our own Steve Leisman, who's been tearing through this report. Steve, what have you found?
Yeah, pretty much that same split there, which is this idea that things did pick up pretty much across the board. Some good stuff there. Consumer spending picked up. Most districts reported that manufacturing activity moved up. But again, it's a level issue, but from a very low level. Construction did remain subdued, though it did pick up in some districts. Home sales increased modestly. Now, the PPP and loan deferrals by private lenders reportedly provided many firms with sufficient liquidity for the near term, it says. However, there's some concern that the outlook remains uncertain because they grappled with how long this COVID-19 pandemic would go on and the magnitude of the economic implications. Good news on employment in this. It increased on net in almost all districts as businesses reopened the ramped up activity. Most of this, I believe, come before the surge. Now, this is an interesting line. It says contacts in nearly every district noted difficulty in bringing back workers because of health and safety concerns, child care needs, we talked about that yesterday, and generous unemployment insurance benefits. They said that have been retaining workers with the help from PPP, but that going forward, the strength of it would determine whether they can avoid layoffs. So that's another interesting cliff that they're facing there. So good growth from the level, but the level remains low.